Here on ET Now, we get you all the voices that matter. And given the current turmoil in the market, ET Now's Ajaya Sharma caught up with Raamdeo Agrawal, MD and co-founder at Motilal Oswal, to understand what's in store. Will the market further crack or rebound from here on? Listen in.
The good thing is that this is under a lot of data flow about election also, though opinion polls are not available, which is more authentic. But betting market and other estimates, what psephologists are thinking in terms of what could be the numbers. So market is getting a lot of data, and based on that, I mean, market is at least believing, as per me, is that there is not going to be disruption. The current government is going to come with a slightly reduced majority, about 245, 250 instead of 282. But I mean, ultimately prediction is prediction. Sure. There will be mistakes. I mean, there will be. I mean, it could be even 300. It could be even a little lower than 245. So, but at least market is not saying that there will be any major disruption in the current dispensation of the things in Delhi.
Okay. So, after Balakot, there was a sense in the market that there would be a blowout again and chances of a complete, swipe by the current government. But lately, last couple of, weeks, the way election voting has progressed, and again, markets have also coincided with coming down from almost 12,000. Nifty has come down to 11,300. Do you think some tempering of expectations has also happened, and it is good that market is going into this event with lower or tempered expectations?
Yeah, see, 1 month is a lot of time with such a noisy kind of election, a claim and a counter claim and various other issues, even defeating this particular part of it. So there is a lot of hue and noise, noise in this thing. So the kind of feel which was there at the time of this actually attack happened a month and a half back, that impact is much more mellowed down, which is good actually. So it's a much more neutral. But I think somewhere it took away the, I mean, forget about what the BJP got, but I think a lot of opposition guys, they kind of they lost the way. So there is no alternative. I mean, now the BJP or Mr. Modi looks to be there is no alternative kind of situation. So to that extent, I think the certainty of his coming back has increased in the minds of the people. But as the time passes, that other factors start coming in and uncertainty starts building up. Somebody says that it might be 180, 190.
Yes.
So suddenly, it brings down the confidence. And then globally also a lot is happening. See, the stock market is a reflection of everything.
Yes.
It's not only about election. In fact, I would say the other things are playing a lot more, in the sense that how the dollar is behaving, how the US-China trade war is on, how the oil is behaving. So those things are also playing a role. But if you see the FI flow as an indicator of what foreigners are thinking about India right now, I think they have become muted, and the decline is because the aggression which they bought in March and early April, that has tapered down.
And even the way China and US situation or circumstances have completely changed in the last 1 week or so. It was absolutely not envisaged earlier. Do you think this comes as a surprise for the market, the way again they are at daggers drawn, because they almost kissed and made up a couple of weeks back?
They seem to be love and hate kind of situation, where every time they find new reason for postponing by another 1 month, 2 months kind of thing. But US has gone ahead and raised the tariff by 25%. If by chance it becomes permanent, in the sense that it gets prolonged, then I think it will have a huge repercussion on the global trade, global competitiveness of China, because a lot of things with China exports right now, the scale and the price at which they can sell is not possible by anybody else. But with 25% duty, a lot of other countries, particularly Indian entrepreneurs, they will be very fast to seize the opportunity. But once let it become permanent, I mean, is it only 1 month, 2 months? You cannot take a business decision based on that.
And there are sections of the market already talking about how India may actually turn out to be a gainer, because a lot of manufacturing capacity from China can...
Too early, I'm telling you, it is too early. I mean, this nature of this base is too unpredictable. I would not count on that too much. So that is one aspect of it which is there. Second is how the FIs are. I mean, in March they just came out with 32,000 crores of buying, which was unprecedented. That took the market to different levels.
Yeah.
And the cooling off of the domestic investor, which is on from October, November onwards continuously, that I mean, you might have seen March flow, which is the lowest. So I think domestics are still cautious, very cautious, I would say. And foreigners are also now sitting on the fence. They are not selling. So it all depends on 23rd.
So half of the Nifty earnings is, you know, almost getting over. What are your reading of the numbers so far? Because on the one hand, there is a lot of talk of slowdown. But on the other hand, so auto companies are talking about slowdown and the numbers are being
visible clearly,
which is visible clearly. But when we talk to Asian Paints at 12% volume growth, say Ajaya for example, 11-12% volume growth, and HUL with a somber commentary gives 7% volume growth. Because you analyze companies right from your private equity business, smaller companies, all the way to asset management, the breadth of companies which you analyze. What is the reality in your view?
See, it's very confusing right now because how much is the actual slowdown in the economy and how much is impacted because of the slowdown in the entire credit flow. I think there is a disruption in the credit flow, smooth credit flow in the system. There is a aversion, there is a aversion to lend, and a lot of what you call winding down of the NBFCs are happening because they want to become just safe. So this is a very confusing environment.
Anything upwards of 220, 230, how do you think markets will react? Closer to 190, 200, how do you think markets will react?
See, it's a huge event risk. I mean,
it is, right?
Yeah, so a lot of local clients also I speak to. So they have taken money or they are sitting on the fence. So I think what market is looking, it is not about the number, it is about the stability.
Okay.
Even with 225 or even 220, if you are able to provide a stable transition, you know, without any much of noise, without any breakdown, so to say. If nobody wants to come with the ruling party to make it up from 220 to 272 and there is a midnight oil being burned to figure it out. If that kind of situation doesn't come, I mean, there is a comfortable transition from one regime to next regime, I think market will be fine. I think market will welcome.
Right. And if there's a question mark on that, then probably we should be.
Yeah, I think market doesn't like uncertainty. So whatever is see, right now there is uncertainty. We might say anything about 245, this pole, that pole, but market wants certainty and event to be out. So that event is not out. So event will be out only on 23rd. So if market further corrects from here, I think that will be very good. Right. Market expectation will be much more muted.
But this time, do you think, how do you rate the 5 years gone by of this government, and where do you see the next focus area will be whoever comes?
I think, see, one of the things which is coming out very clearly is the job creation. You know, and job creation is not about only, I mean, there has to be a lot of effort and, I mean, there was a lot of correction of old practices in terms of how real estate industry was taken care of, how the indirect taxes were unorganized, how the cash and check, you know, there was a loose, you know, about treatment of this thing, demonetization which was done. So a lot of these big changes have been made. You know, and whenever you make big changes, it has its own cost. You cannot do big surgery without pain. So the pain we have gone through, hopefully the next phase will be for growth.
Let's see how much cost they have to.
Yeah, everybody is pro-poor, but the pro-poorness has to come from the taxes.
Yeah.
So, and taxes can be collected only when the economy grows. So I think the growth in the economy, and that will bring all kinds of things like a good job creation, feel-good factor, corporate profits, and hence the stock market. So I think a lot of good things will happen provided the focus is on the growth rather than you know, kind of beating the significant players in the economy.